Hi everyone, Emma Davidson here from the Global Value Fund. As you may have seen, the company has just released its half-year accounts. And this is a 5-minute video that hits the highlights of these interim financials. GVF has had another good 6 months. Total shareholder returns over the period were up 6.4%. As a comparison, global equities in Australian dollars were up 4.9%. Global bonds were up 3.3%. Looking to the financial statements, GVF has maintained a dividend of 3.3 cents per share, fully franked for the half, which grosses up to 9.4 cents for the year. And that 9.4 cents means a grossed up yield of more than 8% on the current share price. And as a reminder, that yield is from a lower risk, highly diversified portfolio. As a graphical illustration of that lower risk and therefore capital preservation within the portfolio, here is a graph showing the first 6 months of financial year 2024. And first up is global shares. They were a bit all over the place, to be honest, as illustrated by this grey bar here on the chart. A lot of ups and downs. It was volatile. Next, I've plotted global bonds, which were a little bit more stable, but still pretty choppy. And lastly, I've shown GVF's NTA returns here in the blue. Hopefully, what this illustrates, or what you can see, is that GVF has continued to be the reliable, steady Eddie, churning out solid and stable income whilst protecting on the downside. The key takeaway for me here, when I look at this graph, is that, global equities often look very exciting, bouncing up and down. And I think as humans, we often remember the ups more than the downs. But it's actually the slow compounding and the protection on the downside that is far more powerful when it comes to your wealth. Global equities were up, as I said, 4.9% over the period, and GVF was up 6.4%. Back on the financials and page 6 of the financial report, the GVF profit reserve now sits at $51 million. Even if the company was to make no more profits from here on in, it would still be able to pay the current level of dividend to shareholders well into 2027. Franking is a little bit lighter because we are an international manager, but there is enough for now. Another highlight for me in the financial statements is the portfolio manager's letter to investors. As usual, this letter is informative, it's articulate, at times it's actually quite funny, and it really provides an insight into how Miles, Mark, James, and Marius think about life. And it's this team that is the real driver behind the investing success GVF has enjoyed. In the letter, Miles reminds us of the incredible year that we've been on, the investing journey that we've been on recently, and how a year ago there was clear consensus that rich world economies were set to do it very, very tough. The bright spot a year ago was going to be China. Looking back today, the divergent fortunes of the US being up and China being down really highlights how lightly we should treat financial forecasts. The team running through this recent past really does kind of put things into perspective, though, and I think it does give you a good insight. As well as the US economy being in great shape, the letter also delves into the impact of M7 on global equities and global indices. But I'll leave you to discover more about M7 in the letter. Also in the letter, the team talks about how the performance or the outperformance in the period was really largely driven once again by the discount capture strategy, which grossed returns of 5.5% in the period. The letter ends with a reminder that the company GVF is coming up to its 10-year anniversary this June, and it provides a table of every single one of the months of GVF's existence that we've done and how we've performed. As a reminder to shareholders, all of GVF's returns are publicly available on the company's website at www.globalvaluefund.com.au. If you scroll across to the company summary page and you select the NTA returns, you'll see every single month there. When you do click on this part of the website, you might notice that GVF has not had a single down year in 9.5 financial years. That's wood. GVF continues to annualize at more than 10% per annum after all fees and expenses. But one of the most important guiding principles for myself, for the team, and something I really hope is visible once again from these results, is that we remain acutely aware of the fact that the capital we are investing represents your savings. To the extent we can, we want to mitigate the risk of capital losses through diversification and ruthless risk management. It's something that we will always adhere to. Thank you to all of our shareholders in GVF. It simply wouldn't be the case that would be coming up to the 10-year anniversary if it wasn't for you. Thank you.